Hey guys, Solo Options here. So today, just kind of building off of the previous video I posted. In this case, I kind of wanted to go over some couple of trade ideas on some stocks that I found. Again, kind of going off with the butterfly strategy, how I'm kind of looking at it and structuring them, and the reasons why. I'll try to keep it short. I know the last one was a bit longer. But for example, in this case, Apple is one of the ones I was looking at. So as we can see here, we've been kind of ranging towards this like 118ish level, which was this low here. We've kind of gone below it a few times. Only this day, which was like March 8th, that we went low as of 116.21, but then we bounced right back up, false breakout, and then we just been ranging right above it. So I was thinking for at least this upcoming week. As of now, it's March 20th. So as of this upcoming week, what's something that could give me some exposure if we keep ranging here, or if we go towards that 118ish level and stay around that range, and at the same time, still with a decent risk reward ratio, that I'm not like necessarily like, selling a credit spread for like 50 cents or something. What's something that could give me some potential to profit if it ranges around here, and even if it goes higher, keep some credit. So I was looking at two specific strategies, and I'll put it up here on TC Works because it's a little bit easier for the option chain. So I was two specific trades I was looking at was a broken wing butterfly 120, again 118, since that's like the support area, and then doing the 114, $2 wide, selling a $4 wide, get a 2 cent credit for it. Your break even is, synthetically you're selling the 116, 114 put spread in this broken wing. So you're with a 2 cent credit, your break even is like 115.98. So let's say 116 would be your break even. So that kind of pushes you away from, like, let's say we have a low here of 116.21. Your break even is like 115.98. So you're a little bit away from, like, let's say a worst case scenario. Of course, the market could always tank lower, but just realistically speaking here, expected move on like only $4. So, or another one, I was like, hey, is there a way maybe I could collect some more credit? So another structure I was looking at, which is the one I ultimately decided on doing, and the one I plan on doing for this week, which I'm already working in this account, is a 1x3x2, which is this one. So in this case, you see here, you get 23 cent credit, 177, 223. 223 is assuming we pin right at that 118. But again, my thinking is if we stay around this 120, 118-ish area, just looking at the chart here, if we stay around this area here for at least at the end of this week, Friday, possibly this butterfly can have a decent widening and maybe have a good potential if at all. So those are kind of like two structures that I was looking at specifically in Apple, and kind of the one I'm leaning towards is this Unbalance Fly of 132. Break evens are almost relatively the same. This one's a bit tighter. The Unbalance Fly has a break even of 116.89, whereas the Broken Wing has a break even of 115.98. So cool thing here on toss, by the way, you guys could compare, to those who are trade on toss, you guys could compare both flies. And a cool thing is these are just expiration graphs, but something that's actually pretty helpful is right here, that you could add like different days to it, and then you can see how the spread would perform throughout each day, which gives you a better indication of like profit losses, where the stock could go in certain cases, and just give you a better feel of how the spread can be working. And then you could compare them for both. I personally just personal preference, just because of a higher credit risk reward was almost the same, a little bit higher theta. So I kind of chose this spread, over the outright broken wing. And so this is just again one specific idea in Apple of, in this case, not a directional butterfly, slightly directional, slightly neutral, you could argue, type of butterfly. Deltas are positive just because you're selling that extra put spread in the unbalance, but at the end of the day, you would want it to stay around that 118-ish area so it widens and you get that full profit potential. So this is just one. Again, it's a tight spread, $2 wide. Ideally, you would like to go wider, 5, 10 maybe, but Apple is like those stocks that it moves, but at the same time it doesn't move. Like I said, expected move is only as like $4 for this week. So there's that. Another one that I was looking at here, apologies, is also in Boeing. So this one's a bit more directional, much more directional. So in Boeing, what I was looking at here, as you can see, we could kind of argue like in a flag pennant type pattern. And so I'm expecting this might break out again. What looks interesting is that if you look at the diamonds, the Dow Jones, we kind of pulled back towards this channel line that we've had here. And so if this holds that support and we rally higher, Boeing being one of the heavier stocks in the Dow is probably definitely going to be one of the leaders to push the Dow even higher. And the Dow has been like the weakest of all the indices at the current moment as I'm recording this, given all the tech fears with interest rates and all that. So my thinking was, hey, maybe we could retarget this high of like 280, and then maybe we go higher from there. So I was looking at maybe like a 280, 300 call spread, and then I was like, well, let me see how I can finance it cheaper. And that's kind of where, as you can see here in Boeing, the 220, 230, 240 fly is what I was looking at. In this case, just an outright $10 wide butterfly. Nothing crazy about this. I went in April 27 just to give myself some more time to be right. And at the same time, I don't have any. In this case, actually, this is Salesforce. My apologies. So in this case, I was about to say those strikes look weird. And so here, so Salesforce is actually the next trade after Boeing that I'm going to go over. So in this case, what I was looking at here was like a 280, 300. Call debit spread trading for like 230, which is not bad. But I was like, hey, how can I get it cheaper? So I was like, okay, let's sell it, another one of the 300. And then instead of doing a 320, which gives me risk to the upside, I wanted to do a 315, which doesn't actually give me full risk to the upside. As you can see here from the trade in Boeing. And let me just put it to expiration so you guys can see it better. So here you see I have no risk to the upside because I'm buying a $20, selling a $15. Of course, the risk to the downside is what I pay for it, $145. And again, you could also see how this can perform throughout the days, which is something super cool in the risk profile on the analyze tab of Thinkorswim. So this was another one that I was looking at. Again, pretty, in this case, a directional fly. The reason being targeting this high and seeing if we go higher from here, assuming we break out from here. I would exit this trade if like we go down here and break below this 240, which was this previous high here. And I was like, okay, we broke down, and just exit the trade for whatever loss at the current moment. But if we do get a break here, I could definitely see this thing going higher. So that's in Boeing. And then lastly, in Salesforce, what I was looking here in Salesforce was, this one's an interesting one because if you see here, this one like moves, but at the same time it doesn't move because, okay, we had this gap down like in last year, December of 2020. And then we ranged for like a good like 2 months basically. Eventually, almost towards the end of February, we filled the gap, which was this right here, this low. We filled the gap, and then we just planked right back down, and now we're ranging again. So this stock could easily keep on ranging. I put some fibs. I was like, hey, if we do get some rally in the tech, maybe all this fear of like interest rates or whatever calm down a bit, and then we just end up rallying higher, I could easily, it could easily be possible that we do see a pullback, at least to the moving averages or to the 50% fib in Salesforce. So I was like, hey, 230 is only $10 away from some 220. So I was like, hey, maybe structuring a 220, 230 type of debit spread. And then I was like, just fly it off at this point, 220, 230, 240 or something. So that kind of got me thinking, because I kind of wanted to target just this 220, 225 zone, but that's pretty tight. Like, like I was mentioning with the Apple, just because I wanted something a bit wider, just because in this case, Salesforce definitely can move at the same time. I would say there's a more potential in Salesforce than there is in Apple. That's just my 2 cents. So what I was looking at in Salesforce was, in this case, again, an expected move of $15. So at 212, I would take it like to 227, 230, So I was like, hey, 230, and you get to see here how the call prices drop off pretty dramatically right after 230. Again, the expected move isn't that high. If you look at volatility is pretty cheap here. IV percentile of only 11%, and even historical volatility is on the lower end at 21%. HV percentile, so it's on both IV and HV are on the lower end of their ranges. So, hence why the option's cheap, expected move is cheap. But again, I was saying if we do get a little pop in this market, in tech stock specifically, we can maybe see Salesforce also rally with it. So I kind of like this like 220, 230 range. So I was looking at here again a directional fly, in this case 230, 220, 230, 240, for a $1.18. Again, look at the risk profile. I'll put it back to expiration so it's easy for you guys to see. Typical butterfly, pins if around that 230. You can see the break evens are much wider at the moment. And again, you could always see how this thing moves over time and just get a better feel of how the spread will react. In this case, again, I also went April 16, 27 days, just to give me some more time to be right. As everyone knows, as option traders, timing and direction is important, not just the direction. And with butterflies, even more so. So these are just 3 trade ideas I was looking at for this upcoming week. Again, just kind of building off from my previous video of how I structure butterflies. So one of them was kind of like a neutral to bearish to bullish type of trade. Basically, it's neutral because it'll still profit if it just stays here. It's kind of bearish because it'll widen if it goes stays around 118, goes a bit lower to 118, and it'll still profit even if it goes up. So you could profit in like three different scenarios, unless you tank really hard. But again, your risk is limited to like $2, which is not a big deal. But you could always manage it quicker, which is the advantage of this butterfly, is by closing one side of the spread, rolling it closer to collect some more credit, reduce some risk. There's different ways to adjust. So this was like a one trade, and then of course we have the Boeing, which is a pretty directional trade, and then also the Salesforce, which is another directional type trade. So these were just some 3 butterflies I was looking at over the homework that I was doing for this week. So if you guys have any questions, comments, please leave them down below. I'm always watching. I'm always glad to answer anything, and hopefully you guys found this helpful. Again, leave any questions, comments, subscribe to the channel, and appreciate you guys watching the video. To those who also are on Instagram, check out my page on Instagram. It's Solo Options, and you could even check out my Twitter, AI Solo Trader. And thank you so much, guys, and until the next one, have a good one.